What is going on YouTube? Hannah back making another brand new Crypto TV episode. In today's video, we are going to be talking about something a little bit different than I normally talk about on the channel. If you guys have never watched my videos before, I usually focus on cryptocurrency and altcoins such as Litecoin, Bitcoin, Ethereum, XRP, things of that nature and exchanges that go along with it so we can leverage trade and short cryptos. But today's video, as I've gotten older, I've started to look at some other ways of making money and using my money that I already have that's sitting doing absolutely nothing and figuring out places to invest it to make more than just 0.01 interest that your normal Chase Bank pays you. So without further ado, I've been focusing on the S&P 500 and I want to give you guys my 10 cents on the S&P 500 and where exactly it plans on going and what exactly I think about it on the channel. So if you guys are new to the channel and are interested in learning about the S&P 500, definitely make sure to subscribe, turn on post notifications, leave a giant thumbs up as this does help out the YouTube algorithm. Make sure to follow me on Twitter, CryptoTheOfficial, and let's jump into today's episode. So, as you guys know, this just hit the news a couple of days ago, literally like 2 days ago. So we have stocks fall in wild session to close out big losing week for tech. Very interesting. Stocks closed lower for a second day on Friday after a wild session in which names that would benefit the economy reopening tried to offset another steep decline in tech. The S&P 500 said 0.8% and we dropped about 3.1% right here. Specifically, I look at the S&P 500. That's pretty much the market to look at when in regards to looking at all of the, conglomerate of big brands and big names and big businesses and things like that. You can see right here, the S&P 500 fell more than 1%, and the worst session since March for the week, the sector fell more than 4%, as we know just recently. So when looking at the S&P 500, I want to do a few things. I want to look at a few things and discuss a few things with you. So let's scale back in time. Let's go back in history, and then I want you guys to definitely let me know what you think. So the reason I've been getting into the S&P 500 and the stock market is because I finally opened up a Roth IRA. I'm 22, opened one up last year, and I've been investing in it for a very long time. Coincidentally, it happened. I invested in it a little bit before COVID happened. So it was very interesting to watch my money almost diminish and completely half itself in a matter of like a month, which is incredible. But if we flash back, using my analysis, my technical analysis that I apply on cryptocurrency, I started to analyze and watch and invest in the S&P 500. So going back all the way to 2008, 2009, when Bitcoin was first developed and first created, you can see the reason behind it was to get money out of big banking systems and back into something so you could become your own bank and in charge of your own money. But you'll notice we saw the 2008, the 07, 08, 09 stock crash. We had the housing market crash too. You can see the massive drop that took a very long time to recover from. Specifically, if we wanted to figure out the time of recovery, we could find the lowest point, which was right here, figure out the highest point, which is right here, and then extend it to when we finally started to hit a market like that. So you can see it was right about here. So this took us 1,460 days, 48 monthly bars. 48 months for us to get from a all-time low back to the most recent point we've had, which was back to all-time highs. So from all-time low to all-time highs, that's where we were. And you can see this took about 48 bars. That's about 4 years, I believe, give or take a few months. Now, I want you guys to notice what we've actually discovered as we started to consolidate off of that. We've started to make some sort of beautiful ascending, channel that we've been able to trade around with and calculate. Now, notice a few things here. So I just want to extend in just a little bit. Notice a few things. So as we've started to recover from the 08, 09 stock crash, we started to find some sort of trend pattern that's been on the market for about 11 years. It hasn't changed. But notice every time we hit this top resistance, you can see we start to reverse downwards. Every time we hit this, we either wick back down below it, close the monthly candle below it, and consolidate and drop. We see some sort of reversal. It's happened more than once. And I just want you guys to kind of follow along with this and plug in as we go. So this was back in, 2010, April 2010. Notice we hit this top resistance. We consolidated on this bar, don't get me wrong, but eventually we broke bearish and fell lower from hitting this resistance here. Flash forward again. We're now looking at 2011. So from 10 to 11, a year later, we once again consolidated back up, rode all the way, the recovery all the way up, set a new all-time high. We retested what appears to be this top resistance. What do? we broke bearish. So once again, flash forward, we start to recover. 12, 13, 14. We go up higher and higher and higher. This time we don't actually hit the resistance. Not too worried about that. Kind of flatlined off here, reversed down to bottom support. We headed up higher and higher and higher. And look what happens. We hit right here. So I don't want to show you guys what's going to happen, but I just kind of spoiled it. But look, so we actually managed to retest once again this top resistance right back in 2018. So when looking at prior market movements and market sentiment, you know that when we hit this top resistance, it usually acts as a bear resistance and we correct lower. So what would you anticipate would happen here? A reversal. Flash forward, what happened? Exactly what happened. We reversed downwards. Moving forward again, what happens? Trump's president, we move forward, we hit the resistance again. We get extremely close to hitting this resistance. We actually set the scale and we are overbought now on the relative strength indicator. Same thing here, but we're overbought on the indicator, and we could ultimately assume the same thing is going to happen. We're going to hit this resistance, we wicked up higher, and we're probably going to see a reversal. Boom, we hit another reversal. We drop. Flash forward again, 2019. We start consolidating back up. We get a little bit higher. What happens? We slowly move. Look, we hit once again in 2019 this top resistance. So based on the prior 6 movements, every single time we've hit this top white resistance, we anticipate a reversal. We anticipate a correction in the market. So look, we're right here in 2019. So last year, December 2019. We hit this top resistance. What do you expect is going to happen? What do you think is going to happen? I would, anticipate a reversal. It's an educated guess. Look what happens. A reversal. We see a massive drop. Once again, COVID 2019. This is a massive reversal in price. We see a massive rejection. Flash forward a few more months. Moving back up to actually right now, you can see what is happening. We're once again retesting this top resistance. What are we most likely anticipating to happen? A reversal. So why are we buying in now? Very, very, very foolish. Let's also look at a couple of things. So I just want to give you guys a more macro outlook instead of a micro outlook. You can see it makes sense now to most people. There's a clear bottom support where the price really does not want to break through. Every single time since 2009. Every time we hit this bottom support, we do not break below it. We head up higher. Every single time. Even here, we wicked below it and we consolidated and closed the monthly candle above the resistance. We actually formed the following month's candle. At this point right here, we came back down, retested bottom support, then headed up higher. So the same thing is applying itself. It's a clear bottom support and it's a clear top resistance. For the first time in years, we've actually managed to close a candle above here, but we do know that there's a very, very, very high chance, especially now during a market where we've had businesses closed, businesses have shut down. American businesses are pretty much done. I mean, we can do it. COVID business close. Or what did I just do? So COVID business closure. You can literally see that 1/3 of New York small businesses are practically gone. People are saying, I can't keep doing this. Small business owners are giving up. 55% of businesses closed on Yelp and have been shut down for good. Over 100,000 small businesses have closed forever. 55%. Yelp says 60%. Nearly 16,000 restaurants are closed. None of this is bullish. We are living in a pandemic. Rejection is happening. Reversal is happening. So why are we heading up higher? It sounds like inflation to me. It sounds like money is being pumped back into here. We're giving extremely high amounts of unemployment to people, which we all know is all great and high and dandy, but the money is coming from the U.S. government that is pumping it back into the market. They're trying to give people money to keep the market up. This is totally inflated. None of this is actually happening. This is literally just a band-aid to cover up the actual wound that's underneath. Nobody has yet to experience the wound. We've been living very high and mighty. This was a very, very, very small recovery that happened extremely quickly too. Consider that in just 5 months, we consolidated back in 08, 09. We recovered in 4 years. This is 5 months. This is ridiculous. And we're also still living in the pandemic, like it has yet to actually hit. Most businesses are closed. You have to wear a face mask. 33% have been, when business is open, you can only have 33% of your people or your people and your clients inside. 33% of people in not only businesses, but gyms and everything like that. Businesses and gyms are shutting down. So we're living in a pandemic. So it makes zero sense as to why we have just exploded up in price. But also consider now we're literally in the overbought market. You can also consider that there is some sort of bearish divergence forming here where prices headed higher and higher and higher, but we've headed lower and lower and lower on the relative strength indicator, which is a sign of a bearish divergence, usually indication of a massive rejection. You can see just a quick Google search for those that don't know what that is, a bearish divergence. You can see it's very clear as day what that is. It's when the prices head up higher as the relative strength indicator heads lower. And it is a warning not to buy the dip and anticipate a massive correction in price. That's what I'm going off of. So you guys would anticipate a small dip in price in these, buying in, but ultimately there's a very high chance we're going to get rejected and correct lower. We're very overextended. The MACD shows that we broke bullish. Everything sounds a little too good to be true. Personally, I had sold my positions in my stock market in my Roth IRA. The second I saw a reversal here, I knew it was too good to be true. The second I saw the reversal, I knew it was too good to be true. The second I saw the reversal, I knew it was too good to be true, and I sold off my position here, only minimizing about $200 to $300 of loss in anticipation to thousands of dollars that we could be losing here. And it is totally legal to sell and move around shares within your Roth as long as you don't pull the money out. So now I am anticipating an even lower movement. Let's see how this monthly candle closes. I can almost guarantee you that if this month's candle, which we have 25 days left, closes below this resistance, this top resistance here, and we close right here, we are definitely in for some very interesting movements. Considering it is September 5th, we have October and November due to the election. We're going to see some crazy stuff. Personally, I don't think the market could pump any higher. I do believe we're going to see some correction. You heard it from me first. That's my opinion. That's my belief. That's why I think it is a good time for me personally to be selling out of my Roth, selling my positions in shares that I have for a long-term perspective in anticipation to buy at a much lower price. I'm anticipating money. If we bought back in here, awesome. But we could anticipate a 25% drop in price, and I'd be buying in right here and making a crap ton of money as we shoot up higher. As we started to, I put my first $2,000 in right around here. We headed up higher, and then we dropped in price, but I was buying all of this up as we headed lower. I bought in here, I bought in here, I bought in here, and it's just parasailed higher. This is too good to be true, guys. Take my warning, consider it. Let me know your opinions down below. Otherwise, if you guys are new to the channel, definitely make sure to comment down below. Subscribe, turn on post notifications, leave a thumbs up. Follow me on Twitter, CryptoVOfficial, and I'll see you in tomorrow's video. Peace.